Morning. Okay, all right. Morning, guys. Morning. Um, Wild day so far. CPI came in butchering everyone. But again, when the market's been ranging like it has been yesterday, started with this. When it's been ranging like this, it's only logical that we're gonna get a breakout. Whenever the market's ranging, it's allowing liquidity to build, right? So above and below, and it's just sweeping the board now. So no, I don't know, not me. I didn't take any trades, right? I'm just chilling. But what I'm saying is this was expected. So I was expecting, that's why I said the thing in the chat about expect them to shake out persons. So let's take a look at what's happening, what opportunities could arise today. Please answer a question in the group. I don't know what your question is. Let's see. The difference between an order block model, the order block model and dealing range model. What dealing range model? I don't know, dealing range model. I'm not sure what you're asking. The order block model, clear. Dealing range model, not sure. UCAD weekly VI, let's take a look. It's been a while since I looked at the weekly chart. Ages ago, man. DXY. Well then. The Zoom model versus the order block model. What's the difference between them? A couple of things. The entry, where you look for your entry is different. But both of them can overlap once you understand both. And instead of having a price, they'll both give you a range. But precision is not that important when you have the narrative down pat. I don't have UCAD weekly here. So let's start with a daily chart. One sec. All right, so DXY daily, talked about this rejection block. This looks very similar to UCAD M5. I was looking at UCAD M5 some time ago. Yeah, rejection block idea. So ideally, trading above the bodies should be enough. And then a rejection, but we'll get to that in a sec. So for now, we have the potential that DXY is trading up to this rejection block. I mean, I'd rather them just go low and take the liquidity. All of this build up here is sus for a sustained longer move. If we're going higher and it's still inside this range, it makes sense to clear internal liquidity and then expand instead of expanding and then retracing for internal liquidity. So I want the buy program to start down here below these lows. That would be ideal. So I'm still looking for lower prices on DXY. I think you need to look at monthly for DXY because there's an imbalance to the left where I think is the draw. DXY monthly. Been a minute since I looked at the monthly chart for DXY. This candle's closing price. That would be my draw if I was looking at the monthly chart because of all of these here and that displacement. So if I go back to a daily, we're already at my liquidity draw, which means now once it's at the liquidity draw, chart patterns should start forming. So we could have, I don't know, any patterns that, turtle soup, whatever, these areas, the drawn liquidity, is where I expect patterns to form. So my expectation now is that we've gotten to the monthly draw. Now that I know that this is the monthly draw, right? We have a rejection block here, swing high here, all of this liquidity here, going into, what's this, the second week of October? Yeah, we're in the second week of October. It makes sense for them to consolidate here and then not do anything else, because next week is options expiry. And that's when we generally see persons or large orders being liquidated. So that means if large orders are liquidating, they run into pools of liquidity, old highs, old lows, and rejecting them depending on if it's a internal run or external run. So this week, the second week of the month, consolidating, normal. And then with the current market condition, it's really not worth it to be pushing to do more in this environment, because be realistic, it just looks low probability. All that consolidation, yeah, something is coming. Something is coming. That's what I think. This has been breaking my heart all week. I didn't want to see them take this low before retracing, because trading higher before taking these lows gives me a nice target. On this time frame, I can't see a target here, so it's forcing me to zoom out to no. It's forcing me to zoom out to a higher time frame, like a weekly, because the daily, I'm not having any information there. So on this time frame, I have here being the last time price traded through a high. We closed here. There was retracement, down candle, price traded through the high. This would be where I'd be expecting my order block to form. So the high of that candle, that would be an order block for me. So the price is $10,150, thereabout. So I think this would be where we get orders coming in the market or buying. No fear, let's get them. And then we have all this liquidity, which is right here, building up above the order block. So based on my personal rule for liquidity, whenever I see an order block being formed and we displace above the order block, any retracements that fail to get back to the order block should house liquidity. So now that's my draw. So I could switch back to a daily chart and see where we are. My broker is going, yeah, if I get that buy, I'm not going to scalp that buy. So I'm going to enter multiple times and then let it run. So we're not very far away from it. Not very far at all. Let's extend this to 5 days starting today. And then wait, so that's a nice element of timing. How do you put, how do you put, oh, it's an indicator, remember? Well, sorry, in case you didn't know. There's an indicator on here called, where is it? ICT tools, this. The candle timers and all that is this part. This tool here is what I'm using to all that. So click a candle, OLHC, and it puts a line there. Paid? No, it's not. Zero light is asking. Just load it on, just load it in MT4 and then it works. But let's get back to the analysis and what we're gonna do for today. So this being drawn down here in an environment where it's Thursday and we generally expect Thursdays to cap the weekly delivery, especially if Monday creates the high, right? This is the earning week, so bias is bearish, isn't it? Earnings week bias is never determined unless you're using like fundamentals or COT data. It's more of waiting for the data to come out and then making a decision. If this is Thursday and I'm expecting this to cap the week, then the drawn liquidity for next week could be here. And I would really love that. So at 9:30, next 2 minutes, if we get market structure shifts higher, I don't want to see them not come back and then trade low. But I'll be trading on an M15 and trading liquidity runs either way. So we'll see. AU stop hunt looks like it's done now. So my first target would be for price to trade up here. So this is also giving me bullish AU vibes, weak DXY vibes. So I like that. Okay. Not touching this guy with a stick. No, I don't have it for MT5. And I want to see gold go long. Now, there's a couple things on gold now that makes it very nice for me. I think you see it as well. Let's use the opening. I'd love if this candle was an order block or is used as an order block, and then we trade higher. So in this condition, if I'm to frame a long-term move, I'd think if this is an order block, price needs to trade through the high. Because of where we are now, we may not get an expansion above this daily high. So price can pull back, close inside here, then the new week starts. When the new week starts, I'll have a range like this to play with, where the upside draw would be this candle's high. So we could have something like Monday taking down here, Tuesday higher, Wednesday take this and it retraces and then it goes above 1700 for next week, and then that caps it. And then the following week we see more sells, or it trades up there to 1700 and then crash. Yeah. But today is definitely going to be a slow day. Which is already way deep down here. So as usual, this is the last day that takes liquidity. All the lows, all the daily lows after this one should also hold liquidity. So now we have liquidity being taken, this down candle. So a similar idea for gold. Upside draw, big figure numbers. Well, big figure is very far from here. Very far. Inside here would be where I'd be looking for price to trade to for EU next week. UCAD lower just feels right. I feel like this is creating a large or higher time frame fractal, and it requires internal liquidity. And all of these come down the menu for me. We also have price trading through a high. All at imbalance, no retracement yet. So breakout traders are now triggered in. I want to see them trade against the breakout traders. So everything here says, wait, don't rush it. And that's the important thing. If it says don't rush it, you don't rush it. You relax. I think I have oil over here somewhere. Someone was asking about oil. Chart window. So here's a low. I think I saw something that said that they're capping oil prices. If they cap oil prices, a couple of things are going to happen. Oh, indices open. I might have to head to a lower time frame soon. If they're capping, oh, this is not the daily chart. My bad. Time frames. Daily. Volume imbalance or FEG. I need more time to do a proper analysis. Can't rush through, can't always rush through the analysis. Weekly OB and daily fundamentally. Yeah, they cut output. Cutting output usually increases demand because everyone is trying to get it before it runs out. So this should inherently make this guy bullish. But let's go to the M15. One sec. Okay, let's get in my phone. UCAD don't short without me. I'm not ready yet, UCAD. Hold on. Okay. Let's start with the DXY M15. So we traded through this high. There's a deep retracement here. Why was there a deep retracement here? What was this going for? This sell side liquidity was clear from yesterday. And this would have been where I'd expect price to trade to if we're going to go lower. Now we did all of this, which means anyone who went short inside here would have their stops above this high naturally. So now that that's taken, I go back to looking at where was the bulk of orders before the stop point. Order block, liquidity. This level right here is where the bulk of the positions would have gotten in. So depending on if you were breakout or you faded this high as resistance, this is trapped order flow. Person's trying to go long, person's trying to go short. This is frustrating persons. They're trying to logically mitigate their positions now. If you went long and it pulls back aggressively like this, you're thinking maybe you need to cut that and keep it a small risk. If you went short here and it spiked, you're now back at break even. So persons with positions are thinking, keep the risk or keep the loss small. So this is just going to frustrate most persons. So DXY right now is unclear. It's doing the same thing like yesterday, building a range. So above and below this range should house liquidity. Since the range is not clearly defined on this time frame, we refine M5, and now we have a better view. Swing high with bodies, price trades above the bodies and reject, so rejection block. So what time is it? It is 9:37. I don't expect this to move immediately. I'd expect this holding pattern to continue for maybe about another 10 minutes, and then we can start seeing displacement. The displacement I'm going to be looking for should take place between this and this. Since I'm bearish, I want to see them trade back Oh, it's already above 50%, so even better. It's above 50%. So I'd like to see this candle here act as an order block and push price low, which may mean gold longs could come on the menu, but we'll get to that in a second. What would make me wrong about this idea is price trading above this high and closing above the high. Since it's a rejection block, it can wick it again. But once we displace below this low, I don't think we should come back. So going forward, I want this candle to act as an order block. I want this low taken, and I don't want price to close above the rejection block right here. Nice and simple. So with that, I'll go over to M5 for everything else. Same analysis, grab my fib. There's my range. There's my range 50%. Very large candle. So let's cut it in half and say, actually exactly where it is right now should be. Nice. That's, so maybe I'll cut risk and trade this as well. Maybe split the risk across multiple pairs once I get confirmation, but time is not. It's not ready yet. NAS M5 should be the same as AU. Same confirmations as well. And it's not the same. So take the fib off. We currently have run on sell side. There's no run on buy side. So no market structure shift. So I'll go long here if it spikes above here and then returns. For order blocks, I have all these lows inside here. I'm gonna use that one as the low. We don't have a candle closing below here. So we have current M5 candle forming now. If this candle closes as a bearish candle, I'll use that as an order block. If we fail to get a down candle closing there, I'm going to be using swing lows and the bodies to frame rejection blocks. So either way, I'll be watching here and here. If this can, ideally, I want this to close as a bearish candle. So I have an order block candidate, and then I'll wait for price to trade through the high. And that's the early aggressive confirmations. Then once it takes here, that's my market structure shift. UCAD M5, same idea. Now I have up and down, so I've got a range. So I'll fib from here to here. Swing high, bodies, price trades above the bodies and then rejects. So I look at that as the ICT rejection block, which means I'd be opting for this candle to be my order block. So shorts inside here. From a risk standpoint, that candle is 25 pips. Whew. Above this should be fine for shorts. But I'll naturally take the best setup above that, and I want to go short inside here. Keep my stop above this. So let's check on them for the moment. Nope, not ready. AU, not yet. UK, no, this is NAS. NAS looks like it's going to give us that market structure shift, which I'm perfectly fine with. And UCAD looks like it wants to shift the market structure as well, and then retrace to the order block. Both of those I'm completely fine with. So disclaimer, whenever I define anything ICT related, it might not be the same thing or the same words that ICT used, right? And let me say this now, so I don't get myself in trouble. Anything I say about anything ICT related are my interpretations of it. So if ICT says an order block is the lowest closing down candle here with the largest body, and then that pushed, and I've back tested and I've found more consistency using something else, I'm going to say that's how I interpret ICT order blocks. If you want the exact ICT definition, they're all on YouTube now, so we're good. What I understand about rejection blocks is if we have a swing high or a swing low, and it has wicks, and price trades above the bodies, not the wicks, and then rejects, then you could use that or view it as a rejection block. That's a definition I've accepted. That's a definition I use. And I think it's in month 4. Yeah, it's in month 4. So you will be, I'll be in this new series. That should be funny. What's gonna, I didn't think about it. So that's what I use, right? That's the definition of the rejection block I use. M5 on gold. That would be funny though. It would actually be funny. We have lows here. Don't have any highs been taken since this was done. So where would buy side be resting? I'll view the highs inside here. What's standing out for me, I don't know what these were for. Oh, that was my entry from yesterday. I'll put that low here. And it looks kind of like 3 drive pattern stuff. 1, 2, 3. So this high is the level that price must take for all the confirmation in the world. That price. All right, 845 now, 945. I mean, did I get that down candle on NAS? No, I didn't. So the red line here is still acting as a rejection block based on how I understand it, right? So I want to see if we continue to reject and trade higher. If we get a down close M5 candle right here, that's exactly what I want. Going back into the order block, perfectly fine. They should be going below that 50 line, perfectly fine. This is trying to break here, perfectly fine. We want to go short inside this. Nothing here to do but wait. Let's do them all. M5 time frame. The stop point. Stop point, wicks. Are you asking if there's liquidity and price takes the liquidity? Should it be with wicks or bodies? From an algorithmic standpoint, if liquidity is resting at the exact price level, I think anything to or through that level should be a stop point. Just like with spreads, if your stop loss is here and spread stops it exactly, you got stopped out. So that liquidity has been taken. So I watch the exact level. Trading through it with a body and then rejecting, still a stop point. Wicking through and coming back, still a stop point. And I don't talk like ICT. No rants. Yeah, it varies, right? It's one of those things where you don't want to force yourself to look at it as a chart pattern, but define it exactly. So from a definition standpoint, if this low houses liquidity, a stop hunt is price trading below that low. So if it's wick and back, that's still trading below. Bodies and back, still trading below. So then looking at any patterns, it should be similar. Now this is sketchy. We don't have any. Where's the buy side? Where do I frame my setup here? Nowhere? Okay, leave it alone. Simple. Don't form fit it. Don't fight it. If it's not clear, it's not clear. What is this? Of all the pairs, it had to be GU. UCAD breaks the lows. Thank you. So market structure shifted from me on UCAD. Do we get entries? What's the XY doing? Pretty much the same. Pretty much the same. Pretty much the same. Now somebody probably found something here on M1. All right, so tap, retrace, and I'm good. That's what I want. Broken, so same thing. Now that this is here, I'd sell that retracement. I mean, GU buys. I'm all for GU buys. Gold, we have a low, we have a candle close, we have the, I'm gonna put a line on the high of that candle. The high being taken, order block candidate is in play. Let's see if we get a retracement back down to the bodies. And today is what? We should be using, is it 0.3 for today? I think it's 0.3 that we should be using. Let me check real quick. Or someone could just confirm in the chat. So go find that picture. So day 4, we should be using 0.3. So if we're using 0.3, I might split 0.1 across multiple pairs. Okay. We want that anyway. No need to think that it missed us. Structure shift as well. So give me that retracement and I'm interested. And same thing for gold. GU, like I have no words. Every other fractal is clear. What's going on here with GU? Why does this look like this? Not interested. Absolutely not interested. But to remain neutral for my folks who trade GU, here, swing low, bodies, rejection block idea. So this could have a deeper retracement than anything else. Either way, not interested. M5. This should be the same as NAS. So retracement inside here. I don't touch silver. And on if Nicholas is on the call. Let's do silver M5 for Nicholas. Silver's market structure just shifted, like literally just now. So retracements should be interesting. I would watch retracements there. So we have 5 minutes before Zoom says we've been here too long, and what we're going to be doing is we know where we want the setups to form. So we ball. We ball. So gold longs, UCAD shorts, NAS longs when it retraces, AU longs when it retraces, and this should retrace to set up everything else. Yeah, look at US 30. Definitely look at US 30. Gold and NQ go in the same direction. It's a bit weird, is it not? Usually it is, since most investors hedge by trading them against each other. But lately, everything has been moving in tandem with DXY. The correlation is very much intact. So, tradable. This is actually, US 30 is actually very much cleaner than most of the rest. Clear market structure shift. Clear order block. Clear order block validated longs. Really? No love for me? No retracement for me? Okay. Where's 8 o'clock? Here. So this is Wednesday. I mean, today's Thursday. Nah. I'm contemplating now for the ones that are moving faster, like NAS. Is it worth shorting to objective? No, it's not short. It's not worth shorting to objective, even though it looks good, because there's no clear way to frame risk here. Let's say we short. Where do you put your stop? Just put it 20 pips and say don't pass that. Madness. Madness. It's stop. Crazy. Absolutely crazy. So the setups have all been framed. It's now a waiting game. It's now a waiting game. Stocking M1s just for not really ideal. I don't want to do that. I want to stay with the narrative. So gold retracing, and we want this guy to retrace, which means don't buy the first drop this makes if DXY hasn't gotten to where you want it to. Because that means if DXY continues to retrace and you bought the dip, it's going to keep dipping. I did look for entry. S&P actually didn't mark it out, but same process. Here's our low. Price traded below the low, no closing, then we have a swing low formed, right? If the swing low is formed and price rejects the bodies and not the wicks, then rejection block. But here we have candle closing below the liquidity. So that would have been our order block candidate. So we need price to trade through the high. Trade through the high here. That retracement would have been buy, or that retracement. Either way, entries inside here. And it wouldn't be far-fetched to look at a gap fill here. But that's gone. So now we wait. We know what we want to see. No rushing. If it plays out without us, then that's fine. If it doesn't give us an entry, then that's fine. 60 days to complete the challenge did not say 60 consecutive days. I don't think I have enough time for another call today because I have to jump on a call right now with the group. But the charts are there. I'll share the charts again just for everyone. And yeah, that's gonna be it for today. We know what we want to see. Just in case anything misses me, risk management is in the plan.